Before we start, I will want you to hit that red subscribe button and also smash that like button to support our efforts in improving this channel. Hey guys, what's up? Welcome back to the Impeccable Investor. 2020 has been a very challenging year for the oil business. Along with this, the addition of the global pandemic caused by COVID-19 has forced millions of people around the globe to stay home and reduce traveling. This has led to the minimization of oil consumptions. Since the coronavirus is contagious, thousands of oil extraction businesses have been temporarily shut down. The supply and demand both have gone down significantly. Short-term oil markets are oversupplied, and that we know that demand is down, and it will be a rough year for the refining industry. But the EIA and a few investors are still relying on a V-shaped recovery in demand, and that is where I feel investors in oil and energy stocks should consider the long-term structural challenges for oil. Surely this pandemic has created a loss in the oil business for the short term. There are some attractive investment oil stocks that might just help you in the long run. Phillips 66 Company, PSX. Phillips 66 Company is a multinational American company that has been in the business since 2012. What makes Phillips 66 a good investment is the fact that it has decreased its capital spending, entered a $1 billion loan facility, and has a temporarily suspended share repurchases. This has enabled them to maintain their dividend payments to their investors. No matter how bad the oil business is doing, Phillips 66 is making sure that they would provide their shareholders with dividends even by decreasing their debt to capital ratio by 30%. Despite the decrease in demand for jet oil, Phillips 66 has the ability to refine jet oil into a more useful and demanding distillate and gasoline to make their demand and supply margin. PSX appears to be a solid investment as the Wall Street analysts believe that the share price will rise considerably in the next 12 months. Enterprise Products Partners LP EPD. Having one of the most diversified financial profiles and a track record of having a distribution growth of 63 quarters straight, Enterprise Products Partners LP is a good option for you to invest in. After a drop in stocks, EPD's yield has risen to a very recognizable level. This has enabled them to support their dividend distributions. With a noticeable return on capital and assets, EPD shows just how efficient it is in generating returns. Enterprise Products Partners LP is a good investment option as it rewards their investors with a 10% distribution yield, which is among the highest dividends that an investor might get. TC Energy Corporation, TRP. TC Energy has been in the business for over 65 years now. Their primary purpose is to transport and store natural gas and crude oil along the generation of power from these resources. TC Energy mainly carries out its businesses in 3 countries, the US, Canada, and Mexico. Long-term contracts provide TRP with a stable asset base, and their regulated rates allow the company to recover their invested cost and get a return on their capital. TC Energy has a strong pipeline base in Canada and the US, which enable them to connect with demand centers. Moreover, the stock prices are seemingly increasing despite the uncertainty in the stock world. With its diversified operations, lower risk business model, and a conservative financial profile, the corporation is best positioned to both maintain its payouts and growth within the future. ExxonMobil Corporation, XOM. ExxonMobil Corporation is inarguably the largest integrated energy majors in the world. It owns assets in upstream, drilling, midstream, pipeline, and downstream chemicals and refining parts of the oil business, which enables them to benefit even from the lower oil prices. Along with that, XOM has one of the least leveraged balance sheets in the oil business. ExxonMobil stocks have seen a rise of 3% in their stock prices recently. It is expected that it will go up since the lower prices do not affect Exxon in their dividend payments. Investors who value a well-diversified asset base and limited exposure to volatility in commodity prices may find ExxonMobil a perfect company to invest in. Ovintiv Incorporation (OVV). Previously known as Encana, Ovintiv Incorporation has been dealing with oil, natural gas, and its properties within US and Canada. Slashing their capital spending has enabled them to pay out their dividends. When we take a look at the price of earnings ratio of the company, it has been lower than its midpoint over the last 3 years. This makes it a good entry point for investors to get a long-term benefit. The stocks have been observed to go up by 11.91%, and it is predicted that it would increase with time to come. Ovintiv is an indigenous choice for value investors because it is tough to beat its incredible lineup of statistics on the front. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss out on any of our videos in the future. Also, watch the 2 videos that are on your screen because I'm sure you'll love them. With that, I'll see you in the next video.